Welcome to the Explainer. So, what if you could buy the actual roads and bridges that the entire AI revolution is being built on? Well, that's the core idea behind a massive, multi-billion-dollar takeover rumor swirling around a company called DigitalBridge. Today, we're going to dig in and see if this is really the deal of the year.
So here's the setup. You've got a tech giant, SoftBank, reportedly looking to buy an infrastructure king, DigitalBridge. This move could completely reshape the AI landscape. So the question is this a genius move, or is it just a risky bet on all the AI hype? Let's unpack the high stakes behind these headlines.
Okay, first things first. To really get this deal, you have to understand the two main players involved. Because on one side, you have a buyer with a really grand vision, and on the other, you have the company that owns the exact stuff needed to make that vision a reality.
Think of it like this. You've got SoftBank, this huge tech investment giant that is dead set on getting a bigger piece of the AI revolution. Then you have DigitalBridge, and what they do is own the digital real estate that AI absolutely has to have. It's kind of like SoftBank is designing a massive city of the future, but DigitalBridge owns all the land and the roads.
And when we say digital real estate, what are we actually talking about? Well, it's the physical backbone of our entire online world. We're talking about massive data centers, the fiber optic networks connecting everything, the cell towers, small cells, all of it. So SoftBank isn't just buying a company here, they're trying to buy control of the pipes.
All right, so what has investors so excited about all this? Well, there's a really strong case being made for a valuation as high as $35 a share. And our first clue comes from how the market reacted the second the news dropped.
The moment these takeover rumors hit the street, the stock just exploded. We're talking a jump of roughly 45%. Now that is not just a little bump, that is a massive vote of confidence from the market.
You know, a price jump that big tells you that investors are taking this very, very seriously. They're putting real money down, betting that this isn't just some wild rumor, but a deal that is actually likely to happen, and at a premium price too.
And it's not just the market talking. You have analysts at major firms like JP Morgan backing this up with hard numbers. They're basically arguing that if SoftBank is truly buying for the future of AI, then a price tag somewhere between $30 and $35 a share is completely realistic.
And this brings us to a key concept you have to understand here, the takeout premium. It's pretty simple. It's just the extra amount a buyer, like SoftBank, pays above the current stock price to gain control. Why? Because they aren't just buying the company as it is today. They're paying extra for its strategic value to their AI plans and for the money it could make years down the line.
Okay, but all of this high-flying optimism really needs to be grounded in reality, because there are some significant risks here that could not only challenge that $35 price tag, but could make the entire deal just fall apart.
So, the first major hurdle is that the company's financials are, well, they're a little murky. On the surface, things look pretty good. They've got strong gross margins. But that's not the whole story. Yeah, when you dig a little deeper, you start to see some potential red flags. We're talking about negative operating margins. The core business itself isn't actually profitable right now. And get this, some scoring systems out there even raise serious flags about the company's financial stability, flagging it as potentially distressed.
And this is a huge one. Nothing is signed yet. The two companies are just in talks, which, believe me, is a world away from a done deal. Any number of issues could pop up and kill this agreement before the ink is even dry.
And finally, that whole $35 valuation, it really hinges on one massive assumption, that this AI gold rush is just going to continue forever. If that demand for infrastructure slows down or if new competition shows up, that premium price tag could start to look like a bubble pretty quick.
So all of this really leads to two very, very different potential futures for DigitalBridge. It all depends on whether the bulls or the bears turn out to be right.
And you can see, this is a truly high-stakes situation. I mean, look at this. If the deal goes through at a premium and AI demand just keeps booming, it's a home run. But if the deal collapses, the stock could plummet right back down to its old levels, maybe around $13 to $15, leaving investors holding the bag with all those underlying business risks we just talked about.
So, what's the final takeaway when you weigh all the pros and cons? Well, it all seems to come down to a really powerful investment concept. Let's call it the final asymmetric bet.
And the core idea here is asymmetric risk/reward. It sounds complicated, but it's not. In simple terms, it's just a bet where what you could potentially win is much, much bigger than what you could potentially lose.
And this is a classic example of that kind of bet. Look at the potential upside in the best-case scenario. The stock could rocket to $30, maybe $35. Now look at the potential downside if the deal fails. It might fall back to around 15 or 20. The math is pretty simple. The potential gains seem to be a lot larger than the potential losses.
So, the final verdict seems to be this. It's a calculated risk. It's a plausible bet, either on the buyout happening or on a continued infrastructure boom. But, and this is key, it's not a no-brainer. Think of it as a bullish watch case. It's a situation worth watching because you've got this powerful catalyst, but you have to be totally aware of the very real business risks hiding underneath.
Which leaves us with the one central question hanging over what could be one of the biggest tech deals of the year. The opportunity is massive, no doubt about it, but the unknowns are just as large. So for SoftBank, and for any investor, the question is simple. Is the prize worth the price of all that uncertainty? Only time will tell.